Hello friends. In the next few minutes, I am going to take you through the key events of the recent past and Kotak Mutual Fund's view on equity markets. After correction seen in the early part of the year, markets have rebounded very sharply from the lows. Over the last 2 months or so, Nifty has risen by more than 10%. The month of August was no different, and it also saw markets in positive territory. Mid caps performed better than large caps after the significant correction that they have seen over the last few months this year. Even as equity markets moved up, other key asset classes showed significant divergence during August. The Indian rupee continued on its weakening trend in August, depreciated by about 3.5% as it crossed briefly the 71 levels. Even as the rupee has now depreciated by close to 10% in 2018 so far, it has so far been a gradual decline, reflecting therefore more the strength of the US dollar than any perceived weakness in the Indian macro conditions. The Indian bond markets also gave up its recent gains, with the 10-year paper sliding close to yearly highs. These were primarily driven by global factors, Brent crude touching 77 during the month, and fears of escalation in global trade wars. Given this backdrop, the positive sentiment on Indian equities was primarily on account of reasonably in line to a slight positive beat to earnings, expectations of monsoon being favorable so far, and a significant fall in emerging markets, which many market participants now believe that a significant reversal is overdue. Within sectors, corporate banks and pharma were significant outperformers, and investors booked profits in retail-oriented banks. With crude now reaching $77, oil marketing companies also were under significant pressure, especially as we enter now a heavy election calendar. Indian equities are at interesting crossroads, with improving earnings on the micro front but deteriorating trends on the macro front. Given this and a key event of elections in 2019, we expect heightened volatility for a good part of the coming year. However, equity as an asset class is best suited for long-term goals. We would strongly advise investors to benefit from this heightened volatility by investing in equities in a regular and disciplined manner. Time in the market is more important than timing the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.